Closing costs. What are they and who pays them? If you don't know, watch this video and find out. Closing costs. What are they and who pays them? So, closing costs are paid according to the terms of the purchase contract between Closing costs are paid according to the terms of the purchase contract made between you, the buyer, and the seller of the home you're going to buy. Usually, the buyer pays for most of the closing costs, but there are instances when the seller has to pay some fees at closing and also maybe help you with your closing costs. So what are closing costs? Buyer and seller closing costs are the monies due at closing, usually ranging from 3 to 5% of the total purchase price. This comprises of fees and taxes. Although buyer versus seller closing costs vary, they're usually very predictable. Loan costs in Texas are around $3,800, give or take, for the average house price. Then prepayment of taxes and required fees payable to country and local authorities on top. When diving into the question of who usually pays closing costs, buyer or seller can be held responsible for paying. Both buyer and seller need to be aware of how these expenses will be paid before it's time to sign that contract. So make sure, as a buyer, you know exactly what you need and that you can afford to pay it before getting involved. So, who pays and what do they pay? The buyer and seller both paid some closing costs. For buyers, closing costs can be divided into two main categories: costs associated with buying a home and taking out a home loan, and costs associated with owning a home. In the first category, lenders and third parties charge borrowers a variety of fees to cover the costs of processing an applicant's paperwork, examining their unique case, and eventually creating a loan. Buyer closing costs, which cover home ownership, include property tax, homeowners insurance, and, if applicable, homeowners association dues. So, lender fees. There's a number of different kinds of lenders you can go to. So some charge some fees, some charge none at all. But on average, you would have to pay an origination fee, which is about 1%, an application fee, processing fee, and you might pay discount points to lower your interest rate slightly. And of course, you would have to pay prepaid interest. That's charged per day from your closing to the end of that first month. Note, the prepaid interest is usually only paid for the number of days which are left in the first month's billing period. For example, if you close your mortgage on July 28th, then you'll only have to pay interest for the remaining 3 days. This daily rate is calculated by dividing the annual interest rate by 365. Accordingly, closing at the end of the month is one way to lower closing costs. What are third-party fees? These are a variety of charges from home inspectors, attorneys, and other service providers, which are charged up front and some at closing. Many of these third-party fees are relatively small, but together they can add up to a few $1,000s. These are always listed on each lender's loan estimate. Some of the billed services can be shopped for and compared between other companies, while others must be fixed. So what are some of the fees that you can shop for? Appraisal fee. This can be from $300 up into the thousands, depending where your house is situated and how big the home actually is. Credit report fee. Any company can charge what they like, but normally that's between $20 and $50. Tax service fee, round about $75 to $100. And of course, upfront mortgage insurance. If you're getting any government loan, you'll have to pay some of this money up front, especially on the FHA and USDA. If you're using a VA, you would have to pay a funding fee, but you may be able to get away with that depending on your level of disability. So what fees do you have to pay as a homeowner? These fees include property tax, homeowners insurance, and homeowners association dues. Although these charges are usually assessed on an annual basis, they are paid and stored in escrow. This is like a temporary bank account that your lender has, which you can't touch, to ensure the cash is there when it's time to pay. Mortgage lenders often maintain these escrow accounts for borrowers to minimise the risk of lending money. Some typical homeowners' fees include property taxes, which are determined by your local government, homeowners insurance, which varies depending on the insurer, the house value, and where the home actually is, homeowners association dues, sometimes you pay them, sometimes you don't. If you do, these are charged if the house is in an area with a homeowners association. Escrow account fee. This goes towards setting up and holding account for your taxes and insurance. What closing cost does the seller pay? The seller's largest cost at closing is usually the real estate commission, which is split between the listing agent and the buyer's agent. This fee can range anywhere from 2% up to 8% of the home sale price, though 6% is a standard amount. So the seller has some more fees they also have to pay. The most common of this is the transfer tax, which transfers the seller's legal property rights to the buyer. Real estate transfer taxes vary according to the region. So also when the seller sells their house, they have to take care of any taxes they haven't paid, any municipal fees, and of course any homeowners association fees. Here's a look at some of the common expenses a seller will have to pay at closing. Agent commission, transfer tax, title insurance, prorated property taxes, HOA fees, credits towards closing costs maybe, seller attorney fees, and any escrowed money promised to the buyer. So the seller can help the buyer by crediting some money towards closing costs. With the seller effectively paying the buyer's closing costs, the amount of the loan may or may not have to be increased, but the need for the buyer's cash in hand is decreased. This will be determined by the appraisal value of the home. Their ability to contribute to the buyer may be limited by the kind of loan the buyer has. So, depending on the loan type, the seller contribution limits associated are conventional loans. The seller can give up to 9%, USDA and FHA 6%, and VA 4%. All of those credits must go towards closing costs. So, closing costs are unavoidable when buying a home. If you take a proactive step to shop around and closely analyse your loan estimate with your closing disclosure, you could save big bucks on those fees. As you start saving up for a down payment, set aside enough money for closing costs as well. Remember that some areas of the country have higher closing costs than others. Above all, be your best advocate. As you shop around, ask lenders to outline the fees they charge and try to negotiate them down whenever possible. I hope you found this video useful. Anytime you, a friend or a family member is looking to buy, sell or refinance, that's what I do in the mortgage industry, and I would love to help. I always appreciate the support by you guys watching my videos, so if you could give me a like and a subscribe, that will help grow my channel and bring even more great videos like this to the public. Thanks, and you guys take care.